Hi, my name is Mark Seymour, manager of the North Star Income Fund, and this is an update for the third quarter 2020. The dynamics in the fixed income market have been quite telling in terms of the impact on market returns. Short-term interest rates are at historic lows, and conversely, inflation is expected to tick up marginally. This is resulting in a huge demand for yield pickup through either exposure to credit or duration. As a result, credit spreads have compressed to below pre-COVID levels for floating rate note senior bank paper, and spreads are well below their post-crisis blowout levels for Tier 2 and additional Tier 1 paper. Performance, therefore, has been quite reasonable. Yields on a forward-looking basis, however, are looking quite unattractive, and particularly given the heightened credit risk, the low liquidity, and the marginally positive real yields. Fixed bonds delivered decent returns with shorter dated maturities performing well. Yields are being anchored by lower interest rates. However, longer dated yields continue to drift higher as a result of the large levels of ongoing issuance and escalating fiscal risk. A similar dynamic is unfolding in the inflation-linked bond space, with short-dated bonds rallying and longer-dated bond yields selling off for similar reasons. As a result of the predominant exposure to short-dated fixed and inflation-linked bonds, the North Star Income Fund performed well over the quarter, with 1.1% contributions coming from the 20% exposure to fixed bonds and 2.5% contribution from the exposure to short-dated inflation-linked bonds. On a one-year basis, the North Star Income Fund has delivered a return of 8.4%, versus the benchmark return of 5.8%. On a forward-looking basis, the fund remains overweight short-duration inflation-linked bonds on real yields of 3%. The fund maintains its exposure to short to medium-duration fixed bonds, also on real yields of 3%. Any progress on expenditure cuts and growth initiatives will be greatly supportive of medium to longer-dated fixed bond yields. The floating rate note exposure has been reduced as a result of the poorer potential real returns and heightened credit risk, and these holds are currently yielding 1.5% real. In addition, the portfolio has a 10% exposure to global currency, which is providing a hedge against the duration risk of the short duration fixed and inflation-linked bond exposure. As a result, the North Star Income Fund is currently yielding 6.1%, with a weighted years to maturity of 3.4 years and an effective modified duration of 0.9.